Hello student, welcome to your channel Finance by Dr. Ratika. Before this is the fifth lecture of cash flow. I hope before seeing this video you must have seen my earlier video so that you will get a better understanding on this topic. See, this is a bit a complicated question I have taken. This is a balance sheet of Mrs. Right and Left as on 2020 and 29 are as follows. Balance sheet data are given for year 2019 and 2020. Creditors, Mr. Loan from bank, capital and asset side the data are given. Now we have given some adjustment that during the year a machine costing 10,000 on which accumulated depreciation of 3,000 was there was sold for 50,000 was not sold for 50,000 was sold for 5,000 beta. 10 should not be there. And the provision for depreciation machinery on 2029 was 25,000. The opening balance and the closing balance was 40,000. Net profit for the year of 2019 was amounted to be 45,000. Now you have to prepare a cash flow statement, students. Okay, for this now you have to prepare a cash flow statement. Before making a cash flow statement, we will make some accounts because there are some hidden transactions are there. Our first account would be of capital account, students. Fine. In this, see, we can see here the opening balance is of 1,25,000. So we'll do by balance brought down 1,25,000. Then the closing balance is of 1 lakh by balance carried down 1,53,000. Okay, we are making a capital account for year 2020 because we will be making the cash flow statement for the year 2020. Okay, and we have given a net profit for the year amounted to be 45,000. So we will given by net profit 45,000. So the credit side total would be, students, 1,70,000. And see, we have given a closing balance of 1,53,000. So what about the 17,000, which is the balancing amount? 1,70,000 minus 1,53,000 is 17,000. So this would be our drawings. Yes, two drawing. This is our balance figure. So this was the hidden transaction, that is the drawing was there of 17,000, students. Understood? Because this will be used in our cash flow statement. Now we will make a machinery account, students. Fine. So we'll see, we will make a machinery account. Here we will write a to balance brought down. The machinery balance, we can see it's 80,000, but we will make a machinery account at cost because there's an accumulated depreciation is there and provision for depreciation account is used. So we will make a machinery account at cost. So the balance would be not 80,000. We will, on this 80,000, we will be adding this 25,000, the opening balance of the provision for depreciation account, 25,000. So it would be 80,000 plus 25,000. So this will be 1,05,000, student. Fine. Now as we have sold one machinery and the accumulated depreciation on that machinery was 3,000. So we will here calculate by accumulated depreciation. I hope all these concepts are clear because these concepts are of your 12th standard base beta. 11th and 12th standard, when we have learned the depreciation account, how to calculate the depreciation account, in this you must have been learned how to make a machinery account at cost and how to adjust the depreciation. If you are not able to understand this part, then let me know. I will make a separate video on this, how to make an adjustment, or you can see my depreciation calculation account. I have already made a video on how to calculate the depreciation, in which I have made a straight line depreciation and return on value method depreciation account. You can watch that video, students. Now we will do by cash how much we have got by cash. See, during the machinery costing 10,000, 3,000 the depreciation was there and it was sold for 5,000. So by cash we get 5,000, and we can see by loss on sale would be, because machinery cost was 10,000, 3,000 was depreciation on it, 5,000 we got from the sale, so remaining 2,000 would be our loss on sale of the machinery beta. Now we can do by balance carried down. We have machinery of 55,000 plus and a depreciation closing balance of 40,000. So it would be 95,000 students. So here we can close our machinery account at 1,05,000 students. This, for regarding this, if it is not clear, then you can watch my depreciation account calculation of depreciation video students. Now we will see the how to calculate the accumulated depreciation. We will go a bit fast. See, by balance brought down, the accumulated depreciation balance is of 25,000 and the closing balance is given of 40,000. See, here we have given in question 40,000, and we will do an adjustment of this. The machinery which we have already sold, we will be subtracting this 3,000 to this by writing by machinery account 3,000. So here the closing would be of 43,000. So the remaining balance would be transferred to profit and loss account as depreciation during the year. Yes, this amount must have been deducted from your profit and loss account as the depreciation for the current year. That's why we have calculated this accumulated depreciation account. Now let's make our cash flow statement for the year ended 2020 beta. Let's start our cash flow statement, students. We are making a cash flow statement for the year 2020. The first thing would be to calculate the cash flow from operating activities, and we will start first with the profit, that is the net profit for the year would be 45,000 as it is given in the question. Now we will do the adjustment. First we will add loss on sale of machinery. How much it was there? 2,000, because it is a non-cash, but it is a cash but it's a non-operating activity beta. Loss on the sale of machinery will come in this investment activities, not on this beta. So it is not an operating activities. Fine. So we will add back this, and then we will add this depreciation, which we must have deducted during the year. So now this would be our 65,000. Okay. Now we will do our current assets increase and decrease. First there was an increase in debtors. Debtors has increased by 20,000. So our cash must have been blocked. So we will subtract 20,000. Then the stock has decreased. Decrease in stock means we must have sold our stock. So the cash must have been come in the business. Then there is an increase in creditors. Increase in creditors means we must have taken the credit. So the cash must have been there in our business. So inflow of cash must have been there. So we will add this. So after deducting 20,000 and adding 10 and 4,000, we will get 59,000. So this 59,000 would be our net operating income, student. Net cash from operating activities. I hope I am clear, student. Now our next step is to calculate cash flow from investing activities, students. And this, the first would be the sale of machinery. We have sold the machinery for 5,000. Okay. Then we can see the land has been increased from 40 to 50. So there must have been a purchase of land. In purchase of land, there must have been a cash outflow. Okay. And what could be there? Okay, fine. The building amount has also been increased from 35 to 60,000. So purchase of building, so another 25,000, student. If we calculate this, then there would have been a 30,000 negative balance, means there must have been a cash outflow from this investment activity. It would be 30,000. So cash flow from investment activity would be this. Now our last step would be to calculate the cash flow from financing activities. Fine. See, the loan was there of 25,000 and then nothing is there in this current year, then there must have been a repayment. We must have repaid our loan. So repayment of loan 25,000. This is the outflow. If the bracket is there, means the cash outflow is there. The loan amount has increased, so inflow of cash is there. Loan from bank 10,000 we have taken in. Fine. And the last, see here the drawing, there is 17,000 as drawing is there. So drawings from capital, there must be in hand withdrawal of cash of how much? 17,000. So 32,000 would have been our net flow from our investment activity, students. Fine. Now we will see the net increase or decrease in cash, that is 59,000 plus 30 plus 32 means 59,000 minus 30,000 and minus 32,000. How much would be there? It would be a negative balance of 3,000. The inflow was of only 59,000, but outflow was of 30 and 32. So a net outflow of 30,000 is there. In this, when we will add our opening balance of cash, that is 10,000. See, we are getting 7,000 as the closing balance, which is there in our answer. Closing balance of cash. As I have earlier told you, in cash flow statement you have a plus point because the answer is there in your balance sheet only. When you will solve the cash flow statement, this should be your ending balance. We start with the opening, we do all the net increase and decrease in cash, and when we add the opening balance of cash, we should get the closing balance, and we are getting it, that is the 7,000. It means we have correctly made this cash flow statement. If you are having any doubt, then let me know in the comment section, and before that, do subscribe to my channel, like it, share it, student. Thank you.